world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Rob Moffat. Rob is a partner at Balderton Capital, a London-based venture capital firm that has invested in fintech businesses including GoCardless, Revolut, Crowdcube, Nutmeg, Seedcamp, ComplyAdvantage, Wonga, Zopa, and more. Prior to joining Balderton, Rob worked at Bain Company and Google. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you like today's show, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Rob Moffat. Rob, welcome to Rebank.
Hi there, how you doing?
Tell us a little bit about Balderton.
So Balderton is the leading venture capital firm focused on European firms, focused on Series A. So we've been doing that for 17 years. We've had $5 billion outcomes, and we're looking to build more of those. So we invest across Europe, and we help those companies go global. We would look for companies with that global level of ambition, but we decided that there's a lot going on in Europe. It's a very exciting place to be, and it's where we're based. And so we focus 100% on investing in companies coming from Europe.
Who's kind of your ideal investment day one? Is it someone who's already got a bit of traction, who's looking to really grow that?
So
is it earlier stage?
Our classic investment is Series A, so investing 2 to 10 million into a company that has demonstrated product market fit, that has a team that has in an enterprise, a B2B business, probably some revenues, but has a lot to do still to scale that up. And that's where we can be really helpful, as those kind of first 5 years of really scaling that company up. We'll occasionally invest a little bit earlier at seed before they have the product market fit, or occasionally a bit later, Series B, where they're already showing the growth coming through.
Are there any specific investments you guys have made that people might be familiar with?
So we're invested in Citymapper on the consumer side, in financial services, Nutmeg, sort of picking the kind of consumer brands that people have heard of. In terms of prior exits, Betfair, the gambling exchange, we were early investors in. Ukes, who merged with Net-a-Porter in luxury e-commerce. A couple of gaming businesses, Natural Motion and Big Fish, and also MySQL.
I understand you're active in a range of verticals, which you clearly outlined right there. But I think you specifically spend a good deal of your time thinking about fintech. Is that right?
That's right, yeah. So I'm together with one of the other partners here, Tim. We're the two who are really driving fintech investing here at Balderton. And as a firm, we've made, I think, 14 or 15 investments in fintech and insurance over the last 8 years. So yeah, we've been very active in the space.
Wow. So how do you think about fintech? I mean, there are so many different iterations of it. And at the very beginning, it was kind of just lending, alternative lending, I guess, and payments. And then over time, it's become everything from insurance to quote unquote reg tech. How do you think about the fintech space? And I guess traditionally, where have you guys focused?
So this is an incredibly diverse space, and sometimes I struggle with the fintech label, because as a business, there's very little in common between Revolut and Credit Benchmark. They both come under the fintech moniker, but that's about it. I think where it is helpful is there are some similar drivers. It's the same market, right? There are some similar drivers in terms of regulation. There are similar drivers in terms of capital requirements and how important that is to the market, which makes it quite distinct to an energy company or a logistics company. So that's where it helps, I think, to be something as a fintech specialist, as a VC, because you start to understand what does Basel II imply, and what is MiFID, and what is PSD2, and how do these affect the different elements of the market, whether it's B2B or B2C. Historically, our early investments in the space were payments, as you say. So invested in one of the early company called Payzone, who were doing payments across sort of local stores. Then invested an early round of Zopa in the peer-to-peer lending space, and Wonga in the short-term lending space. Some other payments companies, Levelup and GoCardless. And then more recently, it's been somewhat broader. So Nutmeg and wealth management, a couple of B2B investments in ComplyAdvantage, who do KYC AML, who were previously on your show. And Credit Benchmark, who are a crowdsourced credit rating. And recently we made a seed investment in an insurance company, which is our second investment in the insurance area.
Mm-hmm. Yeah, I actually wanted to pick up on that, the kind of the insurance space, because I believe you've done a fair bit of work over the past couple of years, even exploring insurtech and market dynamics and what the implications are. Would love to get into that with you. I mean, what are your kind of high level thoughts on insurtech and the interest in that area?
My background prior to Balderton, my first real job was at Bain Company consulting, and my first project at Bain was working for Lloyd's of London. And I spent 12 months sort of consulting for Lloyd's of London and trying to understand the Lloyd's market, which is a really interesting place to start examining as a 23-year-old trying to work through the intricacies of the market. I think what I took out of that was, this is a globally unique asset. The way that the flexibility that Lloyd's has to write business and to think through business, and the amount of money that flows through it is unique globally, but it is also incredibly manual and non-data driven market. And then as I look more deeply at the space over the last few years, you realize the scale of it, and you realize how much technology can change this industry and how little it has changed it to date. You've seen technology have an impact on distribution, particularly with the price comparison websites in the UK. And UK is a global leader, for better or worse, in price comparison in financial services and insurance. But you haven't seen much else. You haven't seen any sort of really significant impact on the insurance industry. And that, to me, is you take an industry that's the same size as the banking industry and very little technological impact to date. That has to be a huge opportunity. The challenge then is, where is that opportunity going to be? And that is what I spent, I guess, the last 2 years trying to figure out. Is it in claims? Is it in product innovation? Is it in distribution? Is it around data-driven underwriting? There's a lot of different areas where you could have a huge impact on insurance, but it's not easy. And so it has to be, I think, a really strong team who are really determined to go through a long road to really disrupt the industry rather than do something incremental.
Yeah, I mean, and you use that word disruption, which I guess is kind of where you were leading my thinking as you talked through that. So if you think about banking, the promise of challenger banks and digital-only banks was that suddenly banking was going to be commoditized, a handful of new players that did everything in a super kind of sophisticated UX, online, digital standpoint. We're going to roll in and effectively margins were going to go to zero. Incumbent banks were going to be saddled with high cost structures and just weren't going to be able to compete. One could envision that same sort of thing playing out in insurance. Is that the sort of disruption you're talking about? Is that could you see that happening?
We have the classic environment for disruption and innovation in insurance, particularly outside the UK. You take a market like France or Germany, where insurance is still overwhelmingly sold via brokers. That is a high-cost channel. To sell 500 euros of car insurance via a human broker is a very high-cost way to sell insurance. But the insurers are dependent on that channel, and it's very hard for them to disrupt it. It's very hard for them to explore direct models. I think if someone can build real traction with a direct insurance play in one of those markets, they have a significant cost advantage. Right? You look at insurance for a mass market category, it's perhaps a 60% loss ratio and a 40% expense ratio. Most of that expense ratio is in distribution. If you can cut that out by going direct, you can have a real cost advantage and take significant share. And I think it's very hard for the incumbents to respond to that because they have this distribution channel that they cannot abandon.
So if you I guess if you think about those handful of potential parts of the insurance sector that might be kind of particularly ripe for this sort of innovation, perhaps even the investment that you guys recently made. I mean, where do you see the most opportunity?
It's a really hard one, actually. I find it hard to answer that question because I don't know the answer, and there are lots of interesting areas. I think to summarize a few that I find interesting, one is taking what I call sort of fat tail type risks and doing them really well. So not car insurance because there's too many people competing for that. There are strong players already. But if you take insurance for pets, pet insurance is a nice category. There's plenty of margin in it. There aren't too many players, but it's also a big category in Europe. And so if you can do pet insurance really well in a way that other people can't do, you can do a sort of specific kind of vertical play and do well out of that. Second area is you go really long tail and you just do all sorts of long tail insurance for strange things that people weren't aware existed, but do that really well using technology. As you've seen Amazon do in e-commerce, right? You just build a platform that allows you to very quickly develop and roll out insurance products for long tail risks. I do think there is just a scale low cost play, but that's going to be an expensive one to do. But I think at some point someone is going to throw 50 million into a technology first insurer built from the ground up that is all about just being low cost. And then I think there are certain areas where you can build an integrated service together with insurance. So it could be cyber protection with built-in cyber insurance. It would be autonomous car with built-in insurance as part of the autonomous car. So these kind of areas where you have insurance bundled up as part of a service, and that requires a different type of insurance, and it's very much driven with data, right? You have so much data from an autonomous car, allows you to insure in a much more precise, on-demand way than you do today.
That it's almost a fun thought experiment thinking about insurance and things like actuarial tables and the way that insurance has traditionally been written, meeting things like AI and neural networks and perhaps models that predict or seem to predict future risks better than our traditional methods, and how that impacts the industry, but also how that kind of plays out over time. Because if you think about, certainly you're pooling risk, and the idea is that principles of diversification kind of work in your favor, so you don't kind of blow up all at once. But it's interesting to think about the nuances of various models and what the risks, even over the medium and long term.
I think insurers, they have smart actuarial teams who are modeling risk, but from my high level understanding, a lot of that is still linear regression type analysis, and there's not a lot of use of the neural networks, sort of machine learning techniques you're seeing in other tech sectors right now. And if you start to really apply that to insurance, and you can get enough data to do so, then I think you could do some really interesting things around underwriting. I don't know if that is the foundation of a great billion-dollar business in itself, but I think it will have a real impact on the industry.
I think you mentioned that you had made a recent investment in the insurance space. Can you talk about that at all?
Not in any detail, unfortunately, but it's an experienced team in the insurance sector who are in that kind of area, the sort of fat tail kind of area where they're going to take one particular insurance risk and do it really well.
Well,
I can talk about the prior investment we made insurance a few years ago, which is a company called Interresolve. And they're really in the nuts and bolts of insurance around claims. So if you have a whiplash claim in the UK or another expensive bodily injury, soft tissue claim, those claims will get dragged through courts. They'll get dragged through the two different insurers involved. It can take 2 years to resolve one of those claims and involve a lot of costs and administration along the way. And Interresolve cuts through that process to get a mediated settlement in a very short space of time, giving a better outcome for the insurer, a better outcome for the insured. So that's been a really interesting business to learn about the everything that goes on in the car insurance market today. And also really interesting as we're seeing a lot of attention, I think, recently on FNOL, first notification of loss, and how insurers can take control of a crash scene, make sure they get the right experts there, make sure that it doesn't get diverted off to high cost repair centers or areas where they're going to get overcharged. And I think that's going to be a big impact on car insurance, is how you sort of have that first notification of loss, the control of the accident scene.
No, I mean, it must be fascinating from where you sit, because you just see so many deals, I would imagine, so many potential companies, so many people doing different things. I mean, even having talked through the insurance space just now, the kind of headline stuff, I don't know, that you read about in TechCrunch or wherever else, is all about using crazy new advanced data analytics techniques to do very cool things. But the previous company that you guys had invested in seems like it solves a real problem in a perhaps tech-enabled, but not pure tech way, which arguably has a more pronounced impact on the industry and the way that it currently operates.
Yeah, and that's certainly my investment thesis. I think I like revolutionary technologies, and there is a lot that, for example, blockchain can do in financial services and in insurance. But I also look for unsolved problems, and looking at Nutmeg, right? There is an unsolved problem in the UK, is the advice gap. You have a lot of people out there who IFAs can't serve anymore because it's not economic, but who need a safe, sensible place to invest their money. And Nutmeg is filling that problem, and that's why it's grown so fast over the last few years.
Switching gears a little bit, you guys invested £1.5 million in Revolut early on. I think it was July 2015 or something. Yeah. They've been quite a story. Some people have been skeptical maybe about their business model, or at least were early on. It seemed to have been hugely costly to offer free services in a lot of the spaces that they were, free transactions, free money transfers, mid-market FX, without maybe a clear monetization strategy, at least to the outside world. What was the investment thesis that you guys went in on early?
So I think we invested in Revolut at seed, and when we invest at seed, our investment thesis is quite simple. Do we think it's an exceptionally strong founding team, and are they going after a big problem? And that was the case. So they're an amazingly strong product team who iterate product extremely fast and really understand FX markets and payments. So that we started from that, and then they were going after this big problem of how do you spend outside of your home country? How do you transfer funds around the world? And the high costs and the intransparency of spread and costs in that industry. So that was our investment thesis going in. I think the question we asked ourselves then was, can we see a route to this being a profitable business? And the answer was yes, absolutely, we can see this route. Firstly, the costs here are not that bad as long as you stay well clear of excessive use of ATMs. So payment costs now in Europe are almost negligible. FX costs, if you're smart and you know what you're doing, are negligible. The only really significant cost is ATM usage. And so Revolut have a fair usage policy on ATMs. They don't have any of their customers taking out £10 here, £10 there, and that's when you really start to build up the costs. Secondly, they've built revenue in relatively early into the business model. So they had some fair usage caps. They had some charges on putting money in. They charge customers now for premium cards, for extra cards. And so they can, through those kind of revenues, get to a position where they're easily breaking even on their customers or even making a small profit, which is a great place to start from. Then you can layer in the cross-sell of other financial products, whether it's loans or it's wealth management, or you add in the business services they started to do with their business accounts, and over time sort of really start to monetize those well.
Mm-hmm. No, I mean, the point you made before about how quickly they've been able to iterate through products. I mean, it's just been lightning. Everything from partnerships to other fintechs to, you mentioned the launch recently of the business play. think, what is it? It was effectively a subscription-based model, kind of, send all you want, money transfers at a fixed fee per month.
Exactly, fixed fee, completely transparent. You know what's happening, and just very easy to use. Yeah.
So then, by contrast, you guys, together with, I believe, Index Ventures and Revolut Capital, invested $66 million worth in a Series B round just recently, this month in Revolut. So I imagine that their pitch was a bit different now than it was in June 15 or whatever it is you guys first got involved. So how has your investment thinking developed in line with their strategy?
And what is amazing about Revolut is the speed that they have grown. Firstly, the speed they've innovated product, as you said, but then the speed they managed to grow without spending any real money on marketing. So they've grown 700,000 users with a marketing spend that's really insignificant. And they've done that because people love the product and because people tell other people about the product. And you can go on Twitter and see these people taking photos of their Revolut cards. It just shows the love people have for that product. And that is really rare for us to see that kind of organic growth and that kind of love for the product, or net promoter score, however you measure it. And that, I think, is what gets people like Index and Ribbit and us to really sort of double down or kind of 10x down on our original investments when we see these companies that we think are really have a shot at getting to many millions of users in a short space of time without spending crazy money on marketing.
Mm-hmm. So, were they at this point saying, over the next 3 years, we're going to do X, Y, and Z and clear line to whatever the next step is? Or is it still, these are things we're thinking about, we plan to continue iterating, we're getting traction here, less here, and we're continuing to kind of work our way through that?
I think there's some things I probably shouldn't say, but I think,
fair enough. Maybe it's a better question for the company themselves.
I think what it's actually surprisingly similar, their proposition, to what it was 2 years ago. So we want to transform payments in general and financial services beyond that. I think probably they talk a bit more now about financial services in general, whereas when we first talked to them, it was much more of a sort of payments FX ambition. Now the ambition is to really go much broader into financial services, but it's still the same idea of iterate product first, work out what works, squeeze out cost, and deliver a great product.
Mm-hmm. So Revolut is a great example of this kind of broader trend toward, neobanking or challenger banking. You can use whatever definitions or distinctions you want. But, effectively the way that banking business models might develop or change in a certainly technology enabled, but also kind of post PSD2 open banking world. I imagine that you, even over and above your specific analysis of Revolut, think deeply about the way that banking business models might change. I mean, what's your general thinking there? I mean, what trends are you kind of following at the moment?
I think the PSD2, I think, is accelerating an already existing trend, which is the verticalization of my financial services. And that in the good old days of banks, I would go to my bank and I would get most of my financial products from my bank, and they would be the channel who would provide me most of my financial products. I think what you've seen, particularly in the UK, is the comparison website driven. I'm going to look for best of breed in each thing I do. And so I end up with a different account for my investments versus my pension versus my mortgage versus my credit card. And the flip side, that becomes very hard work for people to manage. You're having to keep on top of lots of different balances. It's very hard to keep real control of your finances, keep control of all the passwords, the apps. So to me, I think you evolve to a model where you have an overview. You have one trusted overview, which is all of your finances in one place. And then you have some vertical solutions that do certain things very well. So Revolut could be my wallet and my overview, and over time I pull all of my balances into my Revolut app. But I'm using Nutmeg for my wealth management. I have a pension through Nutmeg again, but I have a mortgage through Habito. I have a credit card through ClearScore, and it's all these different providers for the different products underneath, but one place which gives me that overview. The question for me is, what is that one place? Over time, does that become a bank? Does it need to get a banking license? Or can it be something much lighter? It's just an e-money license, or it's even less? Can it be just a very thin layer? Could it be a sort of PFN type tool like a Clio or someone like that? I think that'll be interesting to see how that develops.
Yeah, I mean, I think a lot of my thinking around these developments are almost distinguishing between kind of traditional banking and net interest margin focused business models. And kind of fee-based, whether it's revenue share via marketplace type models, or simply for instance, some of the subscription type services that we mentioned Revolut offering. Yeah. I think that one observation I suppose I'd have about fintech and a lot of the consumer focused fintech plays at the moment is that everything is very much fee and revenue share focused, but I think that people are missing a trick by neglecting net interest margin. I mean, I think that is fundamentally what creates the massive amounts of capital value that have accrued to financial services over time.
But that is what requires a banking license, right? That's the reason to go down the pain and the cost of getting a banking license is to take full advantage of that. And I think that's interesting. But I think the Tandem and other sort of example shows that it's not easy. At the same time, Metro Bank this week announced their first profitable results, or an increase in profits suddenly. And so they're showing that you can come out the other end of this, build a new bank, build a new brand, and come out the other end a profitable entity.
Yeah, I think it'll be interesting to see. In fact, I'm convinced that over time, options will come out to capture, or to an extent share, maybe in the net interest margin without necessarily the same capital intensiveness of a full banking license. I think those will be interesting to in some ways
that's the promise of peer-to-peer lending. And you've seen companies like Zopa reach a certain scale doing that, but now themselves looking for a banking license to have the flexibility that allows, rather than having to match lenders and borrowers. I think that constrains. People want to borrow with ultimate flexibility, but they probably want to lend with a different mindset, and that's where I think being a genuine bank gives you some real opportunity.
Yeah. And last but not least, you mentioned, I think it was the last time we connected, that you've also been paying attention to the Bitcoin cryptocurrency space lately. I mean, kind of tough not to, given spikes you've seen in everything from Bitcoin to Ethereum to Litecoin to everything else, and the kind of surge of initial coin offerings. Interesting, the SEC in the US announcement, or words over the past few days, suggesting that effectively putting ICO organizers, participants on watch, that these are very likely to be considered security type transactions going forward, which surely will have an impact on the space. But and then I suppose on the other side, there's blockchain DLT as infrastructure. Would be curious to know what sort of work you've done in that space and what your interests are.
So we've been looking at the space for 4 years, perhaps. One of the guys here was I think bought his first Bitcoin at a cost of about $3. We have intentionally sort of stayed away from it until recently, but now we think is a time for us to start getting involved. I guess on both sides of the market. I think we believe that Bitcoin is now sufficiently mature that Bitcoin trading is not going to go away, and I think there is a genuinely large market now around facilitating Bitcoin trading, even if it just remains a speculative activity. That is in itself going to be a large market. Similarly for Ethereum. But I think what we're all more excited by, and have always been more excited by, is what are the real world use cases of this, and how can you use it to really transform industries and transform software. And I think there are two parts to that. The sexy part of it is what you can do around public blockchains, so the IPFS, or creating completely decentralized marketplaces, and these kind of areas are, I think, fascinating. And that, I think, there are a very small number of these companies that have used ICOs to raise money, which are genuinely interesting, and where we should, as a VC, be looking to invest in the ICO, because that is the only logical way to fund a business like that. It's not a business that will have a an exit. And so the only way to participate meaningfully as a VC is via an ICO, which has some structural challenges when you're a LP-funded 12-year fund. The second part is the private blockchains, the use of blockchains we're seeing in banks, in insurers, in trade. And that, I think, is a lot to be done. And we're starting to move from the POC phase of the last 2 years into something where you're seeing these technologies starting to get genuinely rolled out. And then we can start to see some software type businesses form where you are doing rinse and repeat, selling the same product to multiple parties. And that's the kind of businesses we can invest in that we can believe will scale fast.
No, I mean, I think I'm totally in agreement there. Early on, I think, maybe it was a question of putting a chip on the table, with something like Bitcoin, but it's kind of a binary outcome at that point. It was, either this thing was going to exist in the future or it wasn't. It was going to shut down for regulatory reasons or, some sort of law enforcement intervention, or for whatever reason, some structural flaw was going to show up, or miners are going to turn off their machines or whatever it was. I think you're absolutely right. We've kind of hit that tipping point. It's going to be around in the future. Now the question is, in what form? Is it an infrastructure layer? Is Bitcoin and cryptocurrencies themselves, I don't know, supporting FX or international transfer of fiat currencies? Are they almost like rails that support other kind of more traditional tangible parts of the economy, or are they do they continue to exist in similar form? But fascinating. But personally, I'm always surprised that Ripple hasn't gotten more traction. Certainly known and certainly around, but I mean, I was expecting early on Ripple to really blow up.
Exactly. It's, and there are a few players, right, who raised a huge amount of money a couple of years ago that have not really kind of taken off. Maybe they will longer term. I think the challenge around becoming the payments rails is that the transaction costs on Bitcoin are too high, and the amount of transactions it can handle concurrently is too low. Even after August 1st, it's still way off where it needs to be if you're going to be any sort of genuine alternative to Visa and MasterCard. And that is a structural problem, not a Moore's Law problem. So that's what I still struggle with, is sort of replacing these kind of use cases where you're going to need to be doing millions of transactions a second.
Yeah, I agree that Bitcoin probably isn't the right candidate for that, but some other cryptocurrency structure slightly different,
exactly.
but hugely interesting going forward.
Very much so.
Before we go, I'd like to ask you a few rapid fire questions.
Okay.
What are you most excited about in fintech and why?
Insurance, because there's so much greenfield out there.
If you were starting a fintech company today, what would it do?
Long tail insurance.
If you had it all to do over again, what would you do differently?
I would have invested all of our fund into Bitcoin at $3.
And then just stayed home, right? Because you wouldn't have
invest
in companies.
Much easier than VC investing. It's always very easy post facto.
What resources would you recommend to people looking to learn more or get ahead in fintech?
And there are a lot of blogs out there on fintech. I think Ana Herrera's one is worth following. I think getting out there to events. I think there is a lot of fintech events around London in particular, of which some of them are good. And I think there's a lot of podcast activity which is well worth listening to.
Rob, what's the best way for people to find out more about your work and connect with you directly?
So my email is on our website, balderton.com. You should also find a link to my blog posts there. So I'm an occasional blogger on fintech topics. So that's the best place to start.
All right. Rob Moffat, thank you very much for joining us today.
Perfect. Thank you.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.